Tuesday, December 30th, 2025, Maneco 64, home of alternative economics and contrarian views. We're going to look at silver today and gold a little bit, but mostly silver. The Gnome of Zürich, yes, some of you might not know who the Gnome of Zürich is. He's an ex-bond trader, bond fund manager from Zurich. I met him in November of 2024 at the Precious Metals Summit conference in Zurich. He watches the channel. He approached me there and we become friends. He's a bit shy. He doesn't want to come on. So I decided to call him the Gnome of Zurich. A lot of you know about him already. We even have a mug for him, the Gnome of Zurich, keeper of sound money. He is, of course, a gold and silver proponent of sound money. Yes, he's an expert in Elliot wave, in the Elliot wave principle. I'm not. I have a rough idea of how the Elliot wave analysis works, but he's a real expert, and we talk virtually every day now. I saw him again this November when I went for the summit again, Precious Metals Summit in Zurich. We've become friends. He even cooked dinner for me, and I met his family this time around. And he was talking to me last week about silver, and that's what we're going to look at, because according to him, from what he told me last week, this correction that we had yesterday in silver could be over already. And we're going to look at something that he's brought to my attention I never heard of, the Lucas numbers. They're like a Fibonacci sequence. And according to him, Lucas numbers are what drive the silver market, while the Fibonacci numbers drives the gold market. And he's got some interesting numbers that I'm going to mention later on in this video. So before we move into silver, just a few things I've seen that is quite interesting. One is from Just Dario. He's based out of Hong Kong. Italian banker, former banker. He's now independent. He's a macro analyst. I've had him on. And he noted that yesterday, the open interest actually in silver with heavy volume, 250,000 contracts, open interest dropped by 2,861, which is unusual because if people were putting new shorts on a day that silver was down massively and that volume was heavy, open interest would have gone up. So what this means is that shorts took the opportunity to cover silver, which is very interesting and is kind of linked to the Gnome of Zurich, but this is separate kind of news I wanted to show you. The other thing is, I saw an article from the Financial Times yesterday. Silver price tumbles as record-breaking rally goes into reverse. I think that's very superficial. The people writing this probably don't follow silver. They think it's over, right? The rally is in reverse. And one of the comments that I thought was interesting from that article in the FT, and I did a screenshot of it, is this one here from App 99. Such hyperbole as usual. The silver market closed for Christmas at 71.80. Right this minute, it's trading at 72.45. Excuse me. So it had a one-day spike higher on the 26th, and then it is now back at the same price as 2 trading days ago. Yeah, so FT, you should always remember the FT is anti-precious metals. So is the Wall Street Journal. The other day, they said that silver investors are amateur investors, right? They don't want you in gold and silver. Into the pet rocks. So yeah, always remember this editorial from '04 from the FT. It says, going gold, the pointlessness of holding bullion continues to sink in. And at the time, April 16th, 2004, gold was trading at $400. So you might want to read this. You can pause this video, do a screenshot, and read the whole thing. The quick story on this is that I read this editorial back then when I was going to work. I was already a gold bug, and I thought it was outrageous. So I cut it off, the paper, and I had it laminated in the office. So that's why I have it. And the other thing, though, is that the world is realizing, in my opinion, that especially the investment world, that they need a much bigger allocation. If right now most investment managers, insurance companies, all the big investors have tiny allocations to gold and commodities. We saw, of course, a few months ago that Morgan Stanley has come out with a new investment model. They've changed the 60-40 proportion of 60 into stocks and 40 into bonds to 60-20-20, which is 60 into stocks, 20 into bonds, and 20 into gold. And now I see here that the largest life insurance provider in the U.S., New York Life, they have $900 billion under management, assets under management. They're suggesting precious metals allocations of up to 20%. Yes, up to 20%. That's huge. And this is just one insurance company, yes, and the largest in the U.S. So it says here, portfolio construction. These are their high conviction investment ideas. Number 8, hedging inflation and geopolitical risk with both gold and commodities allocations, considering gold, precious metals, industrial metals as a 5 to 20% satellite sourced from equity. So that 20% number there, they must know what Morgan Stanley has done to their allocation. So is there anything else I want to show you before we go to cover what the Gnome of Zürich told me? Oh yes, there is. We're still seeing the pricing in China, a big premium between the New York price and the Shanghai price. As you can see here from last night, Gary Bohm, he noted that while New York is trading at $72, the price in Shanghai was at $83.44. Yes, a premium of 11, and he says a 15% premium in the world of global finance. A 15% spread on a fungible commodity is impossible. It's like seeing gold trade at 2,000 in London, 2,400 in New York. It shouldn't exist. So why is it existing? Well, because New York and London, for that matter, LBMA, they're fighting for survival because they're a paper market. And yesterday was all about really a massive last-ditch effort by the shorts. And you saw that Dario noted that the open interest went down. So yeah, the shorts were just trying to run for the hills. So I expect silver to catch up very quickly. And now we come to the Gnome of Zürich. So yeah, last week when I think beginning of the week, silver was trading around 70, maybe a bit below 70. And the thing about Elliot wave analysis, from what the Gnome of Zurich tells me, he always looks at very short-term waves, even though he's aware of very long-term waves as well. But in the short term, he sees a lot of things that most people don't. So he told me last week, yeah, the wave count is telling me that we could see silver next week rally strongly into the high 70s, and then it's going to turn around. It's going to have a very sharp correction, but it's not going to last very long. And lo and behold, by Friday, by the 26th, silver had spiked to like 79, right? It broke through 75, went to 79. And then yesterday, overnight as well, from Sunday, it made a little spike to 84. And then it corrected down to like 70. That's the spot price. And here's where the Lucas numbers come in. And he says that silver is governed by the Lucas numbers. And these are the Lucas numbers here. They're just a sequence of numbers. They're similar to Fibonacci. And you can argue with silver closing around 80 last Friday on the 26th was 79. If you take 11 off, you get to around 69. 70 is good enough. So he thinks the correction is over. And yes, this morning as I speak here, it's just before 8 a.m. London. Well, silver's back up to 74.95. And the high has been 75.20. So yeah, we're very close to 80 again. And so his like kind of short to medium term target is again a Lucas number. And it's 123. That's a Lucas number. Of course, it could be 120, 125. These numbers, Fibonacci and the Lucas numbers, they're sequences that you can find in nature, mathematical sequences. And nature is not always perfect. And the reason why he thinks silver is governed by the Lucas numbers is, if you notice, 47 is a Lucas number. And yes, we've known that silver had a double top in 1980, 2011, around 50. It wasn't perfectly at 50, it was just below. So that's another reason for the Lucas number there. You can see here that 29 is the Lucas number. Is it any wonder it was tough to break through that 30 level? So I think he's got something going on there about the Lucas numbers. So he thinks that the corrections are getting faster and sharper. So and the FT, of course, is trying to say that the rally is over. So I think the Gnome of Zurich could be right, and again, the top callers could be wrong again. And he's got some really interesting targets for later on next year. But yes, the 123, it could be very soon. And after that, we've got 199, which is around 200. According to him, that could be coming before the spring. And we'll look at that later on another video. I'm going to hold that back for now. But so yeah, the Gnome of Zurich thinks the correction is over. And what about gold? Well, gold as well is rallying back this morning. We're back at 43.75. Yes, we were at 45.55. I think that's the all-time high. And the previous all-time high was 43.80. So I think if we get back above that level, yeah, the correction in gold could be over as well. And I have a feeling it is. And seasonally, the month of January is quite positive for the precious metals. And with the news from that insurance company, New York Life, I think we're going to see a lot of financial institutions, especially big financial institutions, allocate a lot of capital in the beginning of 2026 to the precious metals sector. It might be 1%, let's say, of what they have. But if you have zero and you put 1% of trillions of dollars, it's going to make a huge difference for the precious metals sector. The other thing I would say, if you're sitting on the fence, if you thought gold and silver had run up too quickly and you're waiting to buy, well, this could be your opportunity. It might be over very quickly because we might just go right back up to new highs very soon. And also for the miners, of course, they got shellacked yesterday as well. It's going to get even more volatile as the precious metals and commodities in general rally. We saw that platinum and palladium, they were down like 15% or so, even more than silver and gold. So don't forget the bigger picture, and that's what we need to keep an eye on. The macro picture, the short term like corrections that we see, the volatility. Maybe use that to do your dollar cost averaging if you can. And with that, I'm going to wish you all a very good day. Take care. Bye.